We need America's accountant to help get us through this mess. Please welcome to the show, Dan Geltrude. Thanks for being on. Dan, heads I win, tails you lose. What do you think?
That's about it. Look, the whole potential for a soft landing, I think, is out the window. I don't think that there is a way right now to increase interest rates in a way that you're not going to disrupt the economy and tame inflation. That is a fairy tale at this point. So I think what we're looking at here, inflation running out of control, it's going to get worse. It is unfortunate that I think that this has been dropped in the Fed's lap, and they really don't have a choice but get really serious about increasing interest rates, which of course is going to throw us into a significant recession. But I'm not sure there's another way out of this inflationary period for us.
Well, I've said over and over again, and I'm going to say it one more time. There's three main silos of things we can trade in this world, right? One of them is commodities. The other one's going to be anything interest rate sensitive, and that can be bonds or currencies, right? And then the last one's going to be equities, okay? Usually in my career, in 35 years, one of them has been kicking off, right? Sometimes two at the same time, but very rarely all three. And we're in a unique situation here where we've got everything going up in price, Dan. And so I say that the Fed's not going to be able to slow down inflation just with interest rate hikes. They're going to need some help. And they might be just getting it from inflation itself, higher prices, pushing back on higher prices, because everything that you touch, you buy, you look at in the store has gone up in price. That's all kind of a synthetic interest rate hike itself, isn't it? So you've got the Fed really actually raising rates. And then you've also got all the prices that consumers pay everywhere they go also going up in price. That also is kind of a synthetic rate rise too. So maybe we don't have to raise them as much as people think. What do you think about that thought?
Well, that's a very interesting thought, and you may be right. Look, at some point you just get at the level where people simply can't afford things, so they stop buying. But here's the problem. When they can't afford food and their utility bills and their mortgage or their rent, then we have a real problem. And let me just say this. I know you're focusing in on what the Fed can do right there, but what it really comes down to, and I've said this all along, is we have terrible economic policies, specific energy policies coming out of the White House. Now, if we work with the Fed raising rates and we start to change policies coming out of the White House, then I think that we can really do something here. But the assumption, Scott, is White House is going to do nothing, and they're just going to leave it at the Fed's doorstep here. And at the same time, blame Putin. That's the formula they're looking at.
Well, we've seen, and to that point, we've seen other, like the PCE, other inflation indicators that don't have anything Putin-related in it, like, say, butter, and they've gone up way in price, too. So I don't know how you can blame everything on Vladimir. And again, going back to your comment that there's going to be no administrative change when it comes to their policy, and then what we've got happening with the Fed. I mean, I just don't believe in my heart of hearts, Dan, that they're going to be able to do it with interest rates and interest rates only, because that really means that they're going to have to go up a lot higher. Now, you still have some folks out there, some talking heads talking about a 1% hike maybe this week. And then obviously something down the road again. But I don't know about where the economy is and where this market is and how much it can take.
God, I don't know if we can really sit back and afford to do nothing, or the Fed can sit back and actually do nothing. I think they got to take some action here and see if it's going to have an impact, because certainly doing nothing hasn't really proved out as a winning formula. But, let's remember this. Because the White House is refusing to act, it's because, at least partially, they don't understand the problem. See, on the two sides of the scale, and I hope someone in the White House is watching us right now. See, there's two sides here, supply and demand. You guys think we have a demand problem. We have a supply problem. Stop spending money and juicing demand. Work on the supply chain. If you do that, I promise things will get better. Think they heard us, Scott? I don't know.
Well, I'm sure they're watching. I mean, that's a given. I can't believe that they wouldn't be. But yeah, you're right, and that's going to be the biggest thing. But I do think that they've destroyed some demand here. I mean, look, we've taken $8 to $10 trillion off of the wealth of the stock market in the last 3 months. That's got to be something. And then you've looked at the the net negatives we've got, say 15% down, for the year down on the Dow and the likes. With say, I mean, we're close to 30% on the Nasdaq, right? I mean, there has been some significant wealth destruction there. It's just, is it enough? Because it doesn't look like that's slowing things down enough for, they say, the Fed and their interest rate hikes and the inflation rate. So watch this space is the best I can say right now about all that stuff. So I really appreciate you coming on the show. That's Dan Geltrude. We always make perfect sense. It's pretty easy to understand it when you say it, Dan. I thank you for being on. All right.